Live, live, live. Live, live, live. Live, live, live. Live, live, live. Live, live, live.
Really live?
All right, everybody. Welcome back to Chris and Lee helping you buy houses. That was my song for the day. All right, guys, don't forget what we're doing today. We're asking questions about buying houses. What does it take to buy a house? What programs are available? What credit score do I need? What's the down payment? What kind of house can I buy? Can I buy a condo? Can I buy a manufactured house? Can I build a house? Is there down payment assistance? What are banks doing to help people buy houses? So all the questions that cross your mind about buying a house, you're going to ask right here, and you're going to load up that chat box. We're going to answer every single question. You're going to be happy. You're going to give us thousands of likes because we're going to help you become a homeowner. You like that? I just assumed.
Yep, I like it.
I just assumed.
We're going to talk about the one-time construct. So anybody who is thinking about building a house with an FHA loan, VA loan, or USDA loan, we're going to cover that today.
Are we?
Yeah, we're going to cover. I got the guidelines.
We're going
I
to
actually pulled the
cover
guidelines.
it?
Yeah.
Holy cow.
I pulled the guidelines on USDA, which are going to be the
so excited.
strictest of
And I
all the
just
guidelines.
can't hide
Dude,
it.
don't sing. So weird when you sing.
You're just a hater. I got a beautiful voice. I got the voice of an angel. All right, guys. So load up that chat box. We're going to answer all your questions. You're going to love it. You guys are going to love it. I'm telling you. You're going to love it.
Gonna love it. What kind of questions we got, man? I can't see the
I
questions.
thought you were going to tell us about building a house, man.
I'm gonna tell us in a little while about.
Why?
I gotta wait till the people come in because
They're
there's
here. Look it.
a lot of people.
Whoville hater.
Oh, dude, we got lots of questions there. I got a lot of people asking about, can I build a house, VA, FHA, or USDA, buy the land and build the house? And I pulled the guidelines on USDA. So I'm going to cover USDA today. They're going to be pretty close to the same for VA and FHA. So USDA is the most stringent of all the loans. So we're going to go through some of this in just a few minutes, but I got to wait till the count goes up.
All right, here we go. Whoville hater said first.
First,
All right,
what's
man.
up?
You're always first.
If you
Not
ain't first, you're last.
Mrs.
Dude, that
Ramjet.
movie changed our life. Who knows where that's from? If you ain't first, you're last. Say it.
Can you get a loan with W-2 but no pay stub? Very interesting, Miss Ramjet. So here's what it is, Miss Ramjet. Two things. One, you need to prove that you're making money. So if you're getting a W-2, how do you make your money? So kind of clarify that for me on that side. And then on the other side, we're going to get a verification of employment. So when we order that, it's going to say, yeah, they make money, but you got to show us that it's coming in through a paycheck stub. So the answer is probably not, but if you have a special way of getting paid, then may be.
So remember, we're going to teach you right now about the one-time construct. If you're looking to buy a house and you're thinking raw land, build a house on top of it, we get that question all the time. Raw land, build a house on top. Can I do VA? Can I do FHA? Can I do USDA? So we're going to cover that probably in a couple minutes. I got the guidelines right here. We're waiting for all the people that have been asking, and we're going to tell you how to do it. Can you do it? Here's the guidelines. We're about to walk you through it. What do you got?
And so you guys know, if you guys are interested in buying a house, you can go to the link in the bio, click on apply for a home loan now. We'll take care of you. So Whoville hater wants to know, what do I get if I tell my buyers to go with you guys?
Well, Whoville hater. What do you want? I mean, there's something called kickbacks, but it's illegal. We can't give kickbacks. Okay. We do give referral fees. That's not illegal. Referral fees are perfectly fine, but we have to talk with you about it. And it's not like ridiculous. You're not going to get like 10 grand or anything like that. So it's.
But what if we did this, Whoville hater? What if we did this? What if we were able to put you in front of that same buyer year after year after year so they never forgot your name, your face, your phone number, or your email address?
Is Whoville hater a realtor?
I don't know. It sounds like it.
If Whoville hater is a realtor, we'll give you a lot. We do a lot of marketing because that's not illegal. We have to follow the RESPA guidelines, what we do, and we really help our realtors. In fact, the realtors that work with us, they do very well, like very well. As long as they have a little bit of hustle in them, we give them the other things they need. And
imagine if you have a lot of bit of hustle.
We've got a lot of top producers there.
And the Sierra, are there income limits with down payment assistance in Texas?
You go.
Texas. Sometimes there are.
Yeah,
Most of the time there are. So here's what it is. With down payment assistance, you're usually dealing with state, county, city, local programs, okay? And with those, they're trying to help the lower income, so they do put caps. But We do have programs here in-house that you don't have to go anywhere else. We do them in all 50 states where there are no income limits. But know this, when you're going with down payment assistance, you're always going to have a higher interest rate. You're always going to have to either pay back the money or do some kind of living in the house for a certain amount of time, make so many payments type of thing in order for grants to be forgiven. When you get a grant, it's just not forgiven out the gate. You have to follow the guidelines and the rules in order to get the free money. So are there income limits? On most of them, yes. But right here, dealing with Chris and Lee, we have a program that doesn't.
So USDA, one-time construct, you're starting from raw land. I'm not going to go through everything, but I'm going to cover a little piece at a time. You're starting from raw land. Raw land, and here's what they say real quick. Construction loan term, first 12 months is interest only, and the rates are existing OTC products. This is 100% loan to value, which means you can buy the land, you put the construction in there, and the USDA loan is designed to take out the land purchase and the construction loan purpose. 100% LTV, no money out of your pocket. Keep going. I'll get to the next guideline in a second.
Okay.
More
Beast
questions.
mode. Who shot Kennedy? You tell me, beast mode.
Well, we think it's a 3-lettered agency in the government. Not happy about it.
You think a 3-letter agency did it? Or do you think they got a goon to do it? I don't think they did it. I don't think there was no license.
Well, I think they got a couple of patsies, which
That's
they
what
said.
I mean.
Not a goon. The goon would actually have pulled the trigger, but I don't think he pulled the trigger. I think a patsy pulled the trigger. They pinned it on him. Then, coincidentally, this guy got shot, and he can't talk no more. So, wrapped up in a nice little package for us. Imagine that.
You got it.
Ricky Bobby. Oh, dude.
Yeah.
Sorry, I got happy, man. But that's not the movie. You're right. You're right, but it's not the movie.
Can reimbursements be considered income from employer? They add it on the W-2, but not stubs for it. Reimbursements, huh? So what, like a car? Like, what are you talking about reimbursements? Help me out here.
It's not income.
So here's what I'm thinking. You have a car, and they're paying you to pay that car. Is that what you're talking about? Yeah, it'll net zero. So in that case, yeah, it can be added, but you're also going to be hit for the car payment, so it just pars itself out. Texas Girl 86. What states are y'all helping? I'm in Texas.
I'm in Texas. Hey, my primary residence is in Texas. I have a house on Lake Travis. Lake Travis. If you know where that is, about 30, 40 miles outside of Austin. So we do in all 50 states. All 50. Not all banks work in all 50 states. We recently, about 2-3 months ago, got approved for Hawaii and New York. Those are the two that most banks stay out of because it's really difficult. But New American Funding is becoming a very big bank, even through this hard time. So we do business in New York, Hawaii, do a lot of loans in Texas. Closed 2 or 3 last week in Texas alone, just Texas.
All right. So Sammy says, how much? Wait, no, he has more questions up here. I have a question regarding to that. Sammy, we're going to get to it. I see you have a bunch of questions down below. Just hang in there. We're going to get to all of you.
Cool.
Braves fan, home equity loan to consolidate debt, worth it or not?
Well, it's math. Braves fan 07. So if you are paying, let's say, $50,000 in credit cards and the interest is, call it 21%, that's not unheard of. Probably not the norm. I think the norm's not about 19%. But no matter what, you're paying, let's call it 21%. 21%. That's what you're paying every month. So the cost of money is ridiculously expensive. Here's the key. You don't want to have that debt. Those are too expensive of debt. You don't want it. So if you did a HELOC, you can get a HELOC and your rate would be, best HELOC you can get right now is probably 9%, probably 9%.
Yeah, about that.
So 9%, 10%, which is better than 21%. But no matter what, you got to pay that stuff off. That interest payments will kill you long term. So you want responsible debt that's deductible. The deductible debt, the only deductible debt in our system, is going to be interest on a mortgage. So there's a benefit to having that interest payment. There's a benefit. And the benefit is it offsets your income taxes. And that's a big deal. Because if you're doing credit card debt, it does not offset your income taxes. So you have to think about those two things. It's math, but you don't want any of those debts.
Sammy, how much will it cost to build 5-bedroom house?
Sammy, how much you want to spend? That was pretty easy, right?
Yeah, I guess so.
Yeah, because that's so wide open. I can say 50 grand if you're your own construction guy and building a tiny little 5-bedroom house with 1, 2, 3, 4, 5 right there, and then one kitchen, or it can cost you $7 million. So wide open. Anyway.
So put it this way.
Andy the GOAT. is in the house.
Sammy, if you hired a contractor to build you, like a lot of people are building ADUs right now, okay? And a lot of people are building them between 700 to 1,000 square feet. And if you hire the construction guy who hires the roofer, who hires the framer, who hires the concrete guy, and all that stuff, a lot of people are saying about $250,000, $250,000. And that's if you're doing everything by hiring a pro. So if you wanted to build a 5-bedroom house in that range, maybe about that same price. Yeah, I need to go, man. I can't.
Yeah, we haven't seen him in a few days.
Man.
I know, we haven't seen you in a few days. We have had we have had some pretty good haters in the past. So we always dig you guys. You're always fun.
Yeah, but
we've
the
got some
haters
people.
are not smart.
Andy
the goat's pretty sharp.
the goat, he comes back every now and
sharp,
then. Yeah, he's pretty sharp.
The other ones are just like, don't buy houses because not good.
This guy's like, hey, Mr. Series 7, you don't know shit.
I love Andy. Nardos, I make $55,000 a year. How much can I approve?
Well, $55K a year, you're probably in the neighborhood of $240,000 to $280,000, depending on your debt and your property tax base. There's a lot of factors in there. But Nardos, we've been talking for a while. Let's get you that house.
Yeah.
Let's get you that house.
User 6131. Should I go FHA if estimates show it'll be about $100 less a month than conventional? Disadvantages?
So, yeah, that's a good one. User 6131. Here's the catch. If you're going FHA and you're shopping it versus conventional, and you're doing 3.5% down on FHA, one, you're going to have something called UFMIP. UFMIP is upfront mortgage insurance premium, which is 1.75% of the loan. Loan officers aren't going to tell you. Most people don't know to ask. It's just going to be in this big aggregate of numbers, but it's on all FHA loans. 1.75%. So if you're buying a $500,000 house, that's about $8,000. So you're paying $8,000 in addition for the FHA. So just first put that there and move it to a side. Second, if you're doing 3.5% down, your MI is coming in at 0.55. 0.55. So that's going to equate to a number on a $500,000 house, probably $300 a month. Now here's the catch. If you're doing 3.5% down, your 0.55 is for the life of the loan. It's never going to go away. So you have to take that MI of 0.55 and that UFMIP and put it in a pile and call that a disadvantage. Now, if you went conventional with 3% or 5%, depending on which program you used, but if you went with that, you priced out MI. And there's a cost. And that cost might be lower than 0.55 or it might be higher than 0.55 depending on your FICO score. But here's the catch. That will disappear. When your house hits 80% LTV, loan to value, you can petition the bank. At 78%, it's mandated to fall off automatically. So you have to factor that in. By the way, the 80% LTV is based off of the bank's numbers, not your numbers. There's an internal thing they have to do. But it will fall off. There's no question it will fall off. So when you see an FHA versus a conventional loan, you have to see all the moving parts because most people don't even know what UFMIP is. Not even loan officers. They're like, what is this 1.75? I'm like, it's UFMIP. Remember loan officer school? It's upfront mortgage insurance premium. What happens? We just add it to the loan. That's why the loan's bigger. It's not factored in. It doesn't hurt your debt to income ratio. It doesn't hurt anything. It's just an extra $8,000 that FHA gets to keep. Wait a minute. What do you mean they get to keep it? Yeah, they get to keep it. If you flipped out of an FHA to a conventional, they keep it. Now, they do put a weird time frame on it. So if you went FHA and you did an FHA streamline, they would factor that UFMIP and you would get a percentage credit on your second streamline. But I'm getting very complicated at this point. So what's the pros and cons to that? I hope I covered it for you.
J Maestro 444. I have not had anything new on my credit in years, so the length of it is long, which as a result, I don't know what the rest of that is, J Maestro.
J Maestro,
I'm going to assume that you're saying because you've had them so long, and I hope there's zero balances, they have great credit. So the answer would be yes. Okay. Danny D, I have $7K in crypto. Can I use that for proof of funds?
Danny D.
That's not real money.
That's not real money. Didn't you see the Tom Brady roast? Yes, you can. You can because crypto is considered a equity as long as it's in a firm that we can prove that it exists, and you usually get 75% per underwriter discretion. There's a guideline that says 75%, but if it's a little weird, like, hey, I got an NFT that's worth $700 million, the underwriter's going to go, yeah, nah, discretion, nope.
Yep. Tiara Grant, what's credit score requirement?
So, Tiara, listen closely, because I'm only going to say this once in the next minute, and then I'll say it a whole bunch of other times. FHA 580, Fannie Mae Freddie Mac 620, USDA
580.
580. Wasn't sure, that's why I pointed to you.
I know.
And then VA, no FICO score requirement. There's none. It's a residual driven loan. Doesn't matter which FICO score is. It does factor in for debt and responsibility, but there's no hard stop on VA. Like, for instance, if you had a 619 FICO and I tried to get you to do a conventional, hard stop, won't let you go.
Whoville Hater, I have a PM company with about 400 doors. I can send them all your way. What does that mean?
What does PM mean? That's
Property management.
Property management company. Yeah, that would be great, Whoville Hater. Most people that are renters, they stay renters. Yeah, the ones that decide to move off, don't say Ali. The ones that decide to move off and become buyers, those are buyers. But we actually spend a lot of money in the years trying to talk renters into becoming buyers. And we've learned when they naturally make the transition, they make the transition. But we can't force that to happen. It just doesn't happen. We've tried. Like, we've spent hundreds of thousands of dollars. We've papered rental complexes. We've been at seminars. When the person finally changes and they're going to want to be a buyer, they want to be a buyer. That's what it is.
Dude, you didn't even say hi to Navy Mom. She's sitting over here waving.
What's
at
up,
you.
Navy Mom? Great to see you.
This guy.
What's up? For all
Adeline
the moms
Macias.
out there, happy Mother's Day. Happy Mother's Day, Navy Mom, even though it's a day late.
Happy Mother's Day.
Yeah, Mother's Day.
Adeline Macias, how you doing?
Great to see you.
Sammy, I have $400K in cash, and should I buy land and build a multi-duplex?
So, Sammy, we're just talking about that. USDA has the one-time construct, and I have the guidelines right here. So, one-time construct means that you don't have anything. You got to buy the land. Then you got to build the house. Now, everybody asks, can I do that? FHA, VA, and USDA all allow it. Now, it's not an easy loan. It's a very complicated loan. But I got the guidelines right here that say 100% LTV, which means you can include the cost of the land. You do need to get the general contractor. You do need to have all the plans approved prior to the loan funding. And then it funds in stages. So, can it be done? Yes. Is it easy? No, it's not easy.
Hey, everyone. Tap that screen. Give us a bunch of likes. I need 10,000 today.
10,000.
10,000.
Hey, we went live from Victoria Gardens on Friday, and our viewership was insane. Like, ridiculous amount of people. We're going to start going live from the fields from now on. Chris and I are trying to work it out, but we just happen to have an appointment in Victoria Gardens. That's in Rancho Cucamonga, California. And we just went right off the property, right off the premises, so that the security can't kick us out. And we went live, and I was like, holy smokes, look at the viewership. It was insane. So we were helping a lot of people on Friday.
Thank you guys for the hearts. I see them flying in.
Appreciate
Thank you,
you
very
guys.
Much. Amanda Sierra, for the in-house down payment assistance with you guys, what are the requirements?
Good question, Amanda Sierra. 600 FICO. That's the lowest I've ever seen a DAP ever. DAP is down payment assistance program. 600 FICO. What are the requirements?
2-year work history.
2-year work history. What are the requirements?
Call us.
Call us. That's a requirement. Get on it. Let's do it.
Dude, those hearts
Amanda.
are flying in. Thank you guys for the hearts.
Danny D.
Ding, ding, ding.
All right.
I
What's
think
up?
that's CIA answer.
No, ding, ding,
three-letter-
ding. Yeah.
three-letter
Yeah, I
agency.
think so. I think Danny D. Smart. I think you're smart.
Mike Valencia, should I lock in my rate today, 6.8, or wait till Friday?
Okay, so Mike Valencia, 6.8. 6.8. Are you conventional or FHA? So what you're asking is, what do we think the terms of the market is? When I came in earlier, the Dow was down 70 points, but I do believe there's going to be certainty in the market. Because there's certainty in the market, I believe we might float down just a little bit. If it were me and I had 30 days left on that lock, I'd be floating today. If I had 7 days before COE, I'd lock today because I can't chance it. If it goes up, it's gonna make everything go haywire.
Yeah, Raimundo Nieto. Do you think it's worth buying a home in California with the VA loan at these interest rates? LOL.
So, Raimundo, yeah, because here's what's going to happen. What's going to happen is as soon as the rates go down, and they're going to go down, as soon as they go down, there's going to be a flood of buyers in here. Now, if you locked in today, let's say you locked in on a house at $600,000. Very hard to find one, but let's say you found one at 600 grand, and you locked in on that. As soon as the other buyers start coming in, so at the end of 24, in 25, in 26, all those buyers will flood the market, and that neighborhood will no longer be worth 600 grand. In a year or two, it'll be worth 700 grand. So if you bought in today, even if you got a shitty ass rate, it's horrible. Rates suck right now. But you would have $200,000 in appreciation, and 2 years from now, you can go, hey, you know what? I hate my 7% rate. I want to trade it in for a 4% rate. And if you're a VA, I would go, Raimundo, let's use a VAIRRRL loan and make that cost you very little bit money, and you get a better payment.
Raimundo and Hobbybox, thank you for the love.
Appreciate you guys.
Van Neff, I have a credit of 680 and my husband 599. Can I purchase a home with that credit score?
Yes, Vanef, yes. So, Vanef, if it's your legal husband.
Yeah, real husband, not like we have been together a long time.
Yeah, we get a lot of that, by the way. When I ask, are you legally married? I pause on legally because everybody's like, yeah, we're married. Well, we just consider ourselves. I'm like, no, legally. Anyway, if it's your legal husband, there's something I can use called blended credit. Blended credit is when I take your credit at 680, his at 599, throw them together in a pile, come out with the middle. That's a blended credit scenario. That doesn't work on all loans. It's only a certain loan, and there's only a certain scenario where it works, but you have to be legally married. Short of that, you need a 580 for FHA, so your husband qualifies, but you need a 620 for Fannie Mae, Freddie Mac. So you qualify, but your husband doesn't, unless I throw you into that blended credit file, and I guess you're going to come up with about a 630.
Yeah. All things beauty. How long do you have to have a job in order for a loan to get approved in Virginia?
All things beauty. Virginia, irrelevant. Because they're federal programs. FHA's federal, Fannie Mae's federal, Freddie Mac's federal, USDA, VA, they're all federal. So it's a 2-year work history. You can have that job for 1 week. I can actually fund a loan if you don't even have the job started yet. If you just say, hey, I'm moving to Arizona and I start next month in the same field with the same company or even a different company, but here's my offer letter. It's exactly what I used to make over here. You don't even have to have started that job yet. I can make it a post-funding condition that I'll need one of your paychecks that prove you did start the job. So, 2-year work history.
Easy, all things beauty. Livewire, do you need to take classes before we qualify for first-time home buyer program in California?
You go.
For some of them, yes. Remember, you're dealing with state, county, city, local programs, and for some of them, they want you to go through this course with a nonprofit that says, hey, did you know that you might have to pay this money back? Hey, did you know you might have to pay this money back? Hey, did you have to know? Blah, blah, blah. Yep. So in some cases, yes. In some cases, no, because there are bank programs that don't make you do that, but some bank programs make you do that too, and they cost about $100 because that's going to be the next question. Like, is there a fee for this? In some cases, depending on your income, you might be able to fill out a form for them, get it waived, but about $100 is what most people pay. RGV Hobby Box. How about if I already know all the subs but don't have a contractor license?
RGB Hobby Box. Here's the catch. There's going to be, if you're talking about the one-time construct loan, which I believe you're talking about, there's going to be a manager. And the manager is going to have to approve the general contractor. And the general contractor is going to have to approve the subs. Because it can't just be a good old boy network of, hey, I know a guy who can do the floors. Hey, I know a guy who can do the roofs. It's a very regimented system. There is a project manager. That project manager will be paid. They will hold that general contractor accountable. That general contractor must use his approved subs. So it's not just, hey, I know somebody who can get you the tires. You want to just build a car? It doesn't work that way.
Yeah, okay. Lee Oh, one of you's got to change your name. Man.
I know one of us has
He
got
was
to.
here Friday, and I was making it
What's
very
up,
hard on
Lee?
me.
We appreciate you. Dig
So
your name, man.
which one's gonna change your name? You or him?
I don't know. We'll have to talk about
All right.
it.
What? Not sitting outside today?
Nope, not today. Not today.
I wish we were though.
But we are going
was
to
more
again.
fun.
That was strange. We just made a audible. We called an audible, and it worked out really well for us. So we're gonna do it again.
Sammy said Nardos. Hey, Nardy.
What's up, Nardy?
You guys
Dude,
got nicknames?
They're like
You
they're
guys are
first
better
name
friends than
bases.
we are?
They're first name bases.
Can't be
man.
better friends than we
Dude,
are.
Nardy. What's up, Nardy?
Rodrigo. What about first-time homebuyer as a 19-year-old would need? I guess there's more to that question somewhere.
Okay, so Rodrigo, it's income and 2-year work history. If you can prove you had a 2-year work history, let's say that you were a manager at Village Inn when you were 17, and now you're 19 and you're still manager at that Village Inn and you make 80 grand a year. I can make that work. 2-year work history.
Yeah, got a lot of questions. We're going to answer every single one of them. But it's
Every
time for a
single
commercial.
If you need a badass loan, call a badass loan officer. You can reach your badass loan officers, Chris and Lee, at New American Funding by dialing the numbers on the screen. But don't dial them right now because we're live on our phones and we can't answer. We will answer after the live. We will talk to you. This will disappear in 5, 4, 3, 2, 1.
Boom. Sammy, thank you for all the love.
What's up, Sammy?
All right, 10,000
Sammy,
likes,
Sammy,
guys.
Sammy.
10,000 likes. We only
I just
got
like saying
1,500.
Sammy, man. Look at all those roses. Sammy.
So-
Sammy's the Sammy.
10,000 likes, guys. We only got 1,500. More. Please.
Beauty Brown.
Ooh, look at all that love. Read them all.
Beauty Brown followed us. Soul 805 followed us. Thank you. Showtime Catfishing. That's funny. Followed us. Swig. What's up, Swig? Followed us. Ocelli followed us. Hey, we're here for you.
Yeah. Nick said, did he do it?
Did he do it? I don't think Diddy was around, but he could have. Diddy did a lot of stuff, man. Diddy, we don't know what Diddy did, to be honest. Yeah, I know Diddy was 5 years old when it happened, but he could have done it.
Never know. Tony Bradford, many people using refinance later as a selling point, but never explain refi qualifications.
Okay, Tony, we're about to tell you. I'm going to piss you off if you're a loan officer. I'm going to piss you off. I'm going to piss all the loan officers off in this system. I'm probably going to piss off some underwriters too. Here's why. Because our way of dealing with things is just being honest. So, we're all talking about refi later. All right, so when should you refinance? When should you refinance? Well, if you listen to your loan officer, who is your expert trusted advisor, and he doesn't have your best interest at heart, he wants you to refinance every time the loan goes down 75 to 100 basis points. Why? Because it'll pass the test. There's a test. You can't just churn accounts. But if you actually look at the market and you see that today the FOMC is at 5.25 to 5.5%, and you go to the FOMC website and you say, what is the prediction for the next 2, 3, 4 years? The Federal Reserve, who is Jerome Powell, this guy right here, gets to dictate what direction we're going in. And there are 12 members of the FOMC. Here are the 12 members. So they all say that rates are going to go up and down, all 12 of them. So all 12 dots are right here, 5.25 to 5.5. In the next meeting, they kind of move a little bit more. Some of them say we should go higher. Some would say we should go lower. The next one, they spread even more. Then they spread, but then they start to come to a consensus around 2026, 2027 at 2.5%. That's the FOMC rate, by the way. That's not the mortgage rate, but it does affect the mortgage rate. So the FOMC converges at 2.5% at the end of year 26. So what does that mean? That means that when it's time to refinance, you should try and time the market with all the education that you have best you possibly can. It's not a year from now. It's not 2 years from now. It's roughly 3 years from now. And 3 years from now, you should refinance, buy that thing all the way down. Because if the FOMC, the prime rate, is at 2.5, roughly the interest rate should be 4, 4.5. But if they're 4, 4.5 at par, you can buy it down to the 3s, maybe even touch the 2s, and then never touch it again. That's one refinance. Now, if you are just listening to your loan officer, they're like, hey, we've gone down 1%. I think you can save $300 a month. We should refinance. And he makes $5 grand. And then he's like, hey, I think you should go down one more percent. I think you should refinance. And he makes $5 grand again. And then every time you refinance, he makes $5 grand. The loan officer wants you to refinance 4 or 5 times till you get to the bottom. That's the truth of the matter. But if you really look at it, you'll go, hey, that refinance is going to cost me $3,000 to $5,000. And because it cost me $3,000 to $5,000, I want to do it once. I want to spend all my money to buy it down as deep as I possibly can. And then I've done it correctly. Hope I explained it for you well enough.
Yeah, Daniel, I'm under contract on a house, but I don't have a copy of my Social Security. Can I use my passport?
No.
So Social Security is proving another part of your identification.
No.
So, but what your bank can do is they can order it's a certification that actually verifies this. So I would just call your loan officer and say, hey, I don't have my Social Security. Can you order a certification that verifies this instead? And they don't usually want to because it's extra work and it costs a little bit of money, blah, blah, blah. But yeah, just tell them that. Get it over with.
What they want to do, what they're going to tell you to do is go to the Social Security office and go stand in line for 6 hours. That's what they'll tell you to do. But you don't have to.
What's wrong with standing in line for
Nothing
6 hours?
wrong, dude.
Some
Nothing.
people have that kind of time.
Dude, where are we at?
Andy the GOAT, how do you determine if a VA loan or an FHA is better for you?
Andy the GOAT. Very, very, very good question. Here's what it is, okay? You put all of the pros and cons on an FHA. You put all the pros and cons on a VA, and then you choose VA every time. Every time. I'll give you the real downsides. The real downsides are on FHA, you have something called UFMIP, Upfront Mortgage Insurance Premium, which is 1.75%. But then you have MI. MI at 0.55% every month for the life of the loan. On a VA, you have something called, it's called a VA funding fee, but it's the equivalent of UFMIP. And that can go as high as 3.3%. But Lee, you said 1.75. Yeah, correct. I'm not done. So back off. I'm going to give you the answers. So 3.3% is the worst a VA funding fee can get. 3.3%. But if you factor the MI, because there is no mortgage insurance on a VA loan, it's only a few months before this VA is a better deal than the FHA. If you're service connected at 10% or greater, VA is the best loan in the system. Best loan in the system, nothing touches it.
And so when we talk about down payment minimums, like down payment minimums for VA is zero. Okay,
zero.
That doesn't mean that you can't put a down payment.
Forgot that part.
But you can put a down payment.
Yeah.
So for instance, I have a borrower right now that's putting 20% down on a VA loan.
What?
Guess what that does to their funding fee?
Disappears.
No,
Almost.
it reduces it. So because they're putting money down, they have a lower funding fee. So your qualifications get higher. So just because it's zero, and just because FHA is 3.5, and just because conventional with no mortgage insurance is 20%, doesn't mean you can't put more. You can always put more. Jackie Katz, can you get an FHA loan with old department? What'd that mean?
Jackie, clarify. I'd like to answer, but I do not understand your question.
All right. IUPI, down payment assistance is an outdated problem service. Who on earth can afford these mortgage rates when the bubble coming pop?
Bubble, bubble, pop.
All right.
Bubble, 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 pop. I-U-P-I. There's a little bit of teeth in your argument. I'm not going to lie. There's a little bit of teeth. Most people can't qualify for down payment assistance because in order to have enough money to be able to buy the house, you're probably out of the category for down payment assistance. That's the truth of the matter. They still are around a little bit, and we occasionally do one. We're not doing them like when rates were in the 3s and 4s, we were doing 2 or 3 DAPs a month, probably more than that. So 4 or 5 DAPs a month. Right now, we do one every 3 months, maybe one every 2 months, something like that. So there's some teeth in your argument. Is there a bubble coming? Nah. I think you're wrong, and I'll make a case for it. But you got to come on and...
Well, yeah, give us the reason why you believe the bubble pop is
poke
coming.
the bear.
You need to tell us why the bubble pop is coming. No one has the courage or education or knowledge to answer that question. So please, IUPI, answer that.
Yep.
The Pizza Chef, want to buy a house and own a business 6 months in Florida. What do you have?
Pizza Chef,
Not
probably
good news?
nothing. Yeah,
Not good
probably
news?
nothing for you. Not good news because the guidelines. Here's the guidelines. Guidelines say, especially if you're self-employed, you need 2 years. Now, if you just bought a pizza shop and you used to own a sandwich shop, maybe. But if it's your first time being self-employed, we need 2 years. There are some programs where we might pull it off. If you have an 800 FICO and 20% down, I probably have an Alt QM for you.
Yeah. Showtime catfishing. Best way to draw money out of paid off rental property.
You go.
HELOC is probably going to be your best option, or a second mortgage. Here's what we do, guys, just so you know. You have to know that this exists. So what we do is we put in a little tiny bit of data, your name, email, maybe your address, and then we send you a link. It takes about 1 minute to fill out this easy application, and then you get about 5 different options, okay? It'll give you the term, it'll give you the rate, it'll give you your payment, it'll give you all the options, and you just go, that one's best for me.
Like
and
that
then
one.
You access the funds. That easy.
That easy. Swig.
I'm a first-time home buyer and need to start. What would love to buy this time next year?
Swig, we think that's a good idea. We also think you should fill out an application or call us after the live so we can start. We need to know what your credit score is, and we need to know what your challenges are, because everybody has some type of challenge. Maybe it's student loans, maybe it's a divorce, maybe child support, maybe whatever it is, we want to find out so we can teach you the best way to deal with those challenges. We are of the opinion, or at least I am, you learn the rules so you can bend them like an artist.
User 9314, can I buy my parents' house even if they still owe on a mortgage?
Yes.
All right, cool.
Real simple, yeah. If you're saying, can you assume their mortgage? That's a different process. But if you just want to say, hey, mom, dad, I know you bought this house for 200 grand. I would like to buy it for fair market value of 500,000. Here is 500,000. It's just a transaction.
Yep, it's like buying anyone else's house. Yep. Pizza Chef, are you licensed in Florida?
Yes, we are. Florida, New York, Texas, Illinois, Chicago. I know Chicago's in Illinois, but I like saying that because Chi-Town.
A-Dub in the house.
What's up, A-Dub?
Yay, I was hoping you were live. I have questions.
Yay, W. Come on, bring them. We have all the answers.
Sammy with all that love.
Sammy. Dude, Sammy. I like saying Sammy now.
You
know why?
Sammy.
Because we got roses from Sammy.
Arnaldo Villarreal, are you licensed in Texas?
Yes, we do loans in Texas. I'm closing 2 last week. I closed 2 last week in Texas.
What part of Texas you in, Arnaldo?
What parts?
Fernando, do you know about getting a parcel of land and building a dismantling warehouse? How should I do that? Automotive.
So, no, because that's a business loan. If you're doing a one-time construct for your primary residence, there is a VA and an FHA and even a USDA where you can go in, you can buy the land, build a house that you are going to live in, must be your primary, can't be part of your rental portfolio. But if it's your primary, there is a program that allows for it. But for business loans, we don't deal with them. We don't deal with them.
Austin, can you get pre-approved for a mortgage and down payment assistance without a hard inquiry?
No.
You can.
No.
But it's not recommended.
No, you can't get a DAP with it.
Sure you can. Why can't you?
It's a false positive.
Agreed.
Okay.
But you can.
It's fake.
You can.
It's fake.
It's not real.
Yeah.
But you can. And it's not recommended.
Yeah. If you want real, no.
So here's what a lot of loan officers will tell you, okay? Because they're trying to get you to convince you to work with them, okay? I could do it with a soft pull. I could do it with a soft pull, which means you only pull one of the bureaus. Problem with that is you only pull in so much data. It might be right, it might not, and then when you get into escrow, you might not qualify anymore. So can you? Yes. Is it recommended? Hell no.
No, hell no.
Andy the Goat, here we go, Series 7.
There we go. Andy the Goat, man. You got pop it out. Pop, pop, pop. Love it.
AW, is a pre-approval guaranteed approval? What's the fastest an FHA can close?
AW, no. Pre-approval is not a guaranteed approval. No guarantee.
Actually, there's 2.
The best, death and taxes. The best you can do is something called a TBD underwrite. A TBD underwrite is not a pre-approval. So here's what it is. A pre-approval, as a loan officer, I bring in your income, I calculate it, special way we do it. W-2, 1099, self-employed, own a business, whatever. I calculate it my special way. That's why we have licenses. And then I say, this is your income. Then I put you into DUAUS, which is desktop underwriter. And I go for an automated approval. And that's called a DUAUS. And then I get an AE, which is approve eligible, which means I put in all the stuff. I'm licensed to do it. I pulled your credit. I brought everything in. I verified your assets. And the computer says, you're good to go. Now, if I did something wrong, that's not a real pre-approval. So that's called a pre-approval. A TBD underwrite is this. Hey, I did all that exact same stuff, and then I said, hey, Mr. Underwriter, I'm sending this into underwriting as if we are in contract right now. And they will go further than I did. See, I went to your income based off of your W-2s and your paycheck stubs. They go further. They do what's called a VOE, which is verification of employment. They're going to call your job, and they're going to find out what they did. They're going to find a 4506T, which you gave me your tax returns, and I believed you. So it's simple. But the underwriter says, I appreciate that, but I'm going to get them from the IRS. So the underwriter is going to pull them from the IRS, and then when they come back, they're going to stamp it and go, this is a TBD approved, TBD approval, to be determined approval. That's the strongest you can get. However, that can still fall apart.
Yeah, thank you for that. Livewire, Godson, Alex, Miss G.
Damn, we got a lot of people following us.
Amanda,
Andy the Goat's just
March
following us?
Kingdom.
That can't be right.
Thank you all for the love.
Andy the Goat can't just be following us, man. He's been with us forever.
Right.
Unless he unfollows us after every live.
Maybe. Surge the Macon. Aye, greed. Stop being so greedy.
You're right, man. Greed sucks.
Answering all those questions is
I
a greedy thing.
Greedy. That's a greedy.
Crystal 1983. What's VA Earl loan?
So a VA Earl loan is this special loan inside of the VA system where they get rid of most of the fees. It's a very thin loan, and I don't even have to check your income. I don't care if you have income. Here's what I care about. When I pull your credit, all your last 12 months were made on time. Your credit score is somewhat decent, and your overall portfolio gets better. So you used to make a $4,000 payment, now you make a $3,500 payment. It can't be close. I can't go, hey, you used to make a $4,000 payment, now you make a $3,900 payment, because that's only a $100 savings. There's something called a net tangible value test that it has to break even within a certain amount of months. Do you know? I don't remember how many months.
You know.
So I think it's 24, 26 months. Don't quote me on that. But it has to be better, and it has to break even, because there's a cost for an Earl, but it's a thinner cost. And it's only available to a veteran with a loan that has over 210 days of payments on it.
Yeah, got a lot of questions. We're going to get to every single one of you. So
Every single one.
In there. Sit still.
Sit still.
Creation Clause 8. Legally married. We are married in Mexico, but not in California. Is that legally married, LOL? Is Mexico even really a country? Let's be honest.
Dude, that was harsh.
What? I love vacationing there. I vacation there all the time. It's freaking awesome.
Harsh.
No. The answer is no. You are single here in the States. The States have no idea that you told Jesus or the priest or whoever, yes, I do. So, no, that doesn't count. You're actually not married here in the States. Maui and 11. What about bank statement loans?
What about them? Yeah, we have them. We do bank statement loans. It's really simple. Bank statement loans, they're like, hey, how complicated? Not very complicated. Give me your bank statements for the last 12 months. If you had $10,000 going every month for the last 12 months, and I can prove it for the last 12 months, then I add all 12 up, 120,000, cut that in half. Your income is 60,000. I'm able to use that.
Right. Miss Shy 702. Any program for first-time buyers in Las Vegas, Nevada?
I got one for Las Vegas, Nevada that goes down to 600 FICO. 600. Boom chakalaka.
I don't know.
Yeah, that's a lot. Okay. Yeah, so yes, we have them.
Merchant Kingdom. If you move from one state to another and never have lived in that state or owned property, it's right here, do you consider you a first-time home?
That's cute. That's cute. That is cute. But if you owned a home in California and you moved to Nevada and you're trying to buy a home, I don't know if you know this, but the states talk to each other, and the credit talks to each other, and Cavers talks to each other.
Never owned a property.
Never owned a property makes you a first-time home buyer.
Whether you move in states or not is irrelevant.
Yeah, that's what I'm getting to. Dude, you have to
back
up,
dude,
man.
they're going to go back to work. We need to answer their questions.
So, if you did own a state in a different state and you moved to a state, we know. Everybody knows. Everybody knows. It's pretty simple. But if you've never owned a property, you don't even have to move states. Wherever you buy, you're a first-time home buyer.
All right. Elite Gods, do I need to work for the full 2 years?
I don't know about working, because working is an actual physical activity, but you do need to have a 2-year work history.
Yeah, for a full 2 years, yes. Mm-hmm. Even if there's gaps, doesn't matter. A year worth of gaps, 2 years we need to add up. So let us know the 2 years and yes. Amanda, are there any no closing costs cash out refinances?
That's cute, Amanda.
Aww.
That is cute. Does that say rep? No, okay. So, Amanda, no closing cost cash out refinance. You're going to get told that there's no cost, but there's always a cost. It's just built into the loan and you don't have to pay for it out of your pocket. Just think about this, Amanda. When somebody goes to sign the notary, do you think that notary's free? No. Do you think the bank's paying for it? No. They can tell you, well, it won't cost you anything out of your pocket, but they'll build it into the loan. It's always a cost.
Always a cost. Hobbybox, you're welcome. Says, thanks, guys. I want some Powerade. Can overtime pay be added in your regular income to qualify for a loan?
You take that.
So it's going to be the same as all the other income that we talk about. If you're self-employed, if you're a W-2 employee, if you own a business, you need a 2-year work history. Same thing applies for overtime. So as long as you can prove, well, we'll find out because we're going to order verification of employment. But as long as you've had the 2-year work history, yes, but it's an average. So if you just made $10,000 in overtime last month and you made $1,000 last year, we are going to average that. But overtime absolutely can be used. It's very popular, used all the time, and I recommend it, especially with these price of houses nowadays.
Techie Rider.
What? I'm trying to build a pool and Chase doesn't do HELOC. How should I go for this loan?
Well, why do you just Chase? Why Chase?
Chase doesn't do HELOCs. What do I do now?
Yeah, what do I do now? Okay, so I don't know if you've heard, but there's another bank out there called New American Funding. Yeah, we do HELOCs. There's a lot of other banks too, but we do HELOCs, and that's why you're tuning in here, so you can know. Chase.
There's so many HELOC programs. Everyone does HELOCs.
Yeah,
the big banks, not so much,
Yeah.
but everyone does HELOCs.
Yeah.
So if you're interested, just give us a buzz. Phone number's
Cool.
right there. Techie Rider. I'm trying to build a pool.
We
I
just
already
did
read that. Already read that. Eric, thank you for the love. Maddie Boo, how long does closing take on closing day usually?
How long does... Okay, so Maddie Boo, you're in line, and there are some people that are in the front of the line because their realtor and their loan officer said, I must fund and record today. So those guys go to the front of the line, but there's a line. Usually our cutoff is about 2 o'clock Pacific Standard Time, but sometimes you can go a little further. Depends on whether you have to fund or not. And it also depends on if you are in a wet fund state or not. Some states wet fund, which means you can fund and record immediately with just the docs signed, but some of them actually have to have the physical possession of the docs, which changes the situation.
Yeah. Luna and Bagheera back in the house.
What's up, Luna Bagheera?
Welcome back. Went to see a home yesterday. Lots of traction.
Yay!
That's good news for you because I know you're shopping right now, but that's bad news for those people who aren't pre-qualified
I
yet.
know, right?
Why, Lee? Why is that bad news?
Well, because as soon as the rates go down, there are going to be a flood of borrowers coming in. I know because I have a file full of borrowers who, as soon as the rates come down a little bit, they're all going to shop because they can't afford it right now. But as soon as the rates go down, they can. So once that happens, prices go up, and
That's it. Pay
Reasonably,
more.
yeah. Tripping in Vegas, dude.
Thank
I
you
dig
for
that.
the love.
Tripping in Vegas.
These people
I
are very
love that
creative
shit.
with
Yeah.
their names.
I
Like
dig
Luna
that,
and
man.
Bagheera, that's pretty funny. Susie Nichols, I currently have 3% rate. Is there something lower, or can I change my loan from 30 to 40 years? 3% rate. Oh,
Susie.
currently have. Okay.
Susie, you have a 3% rate, and you want to go lower. Have you been watching the world? Because rates are 8%, 7% up there right now, and you're at 3%, which everybody alive today would like to have.
Everybody.
Even the ones who say, I don't like 3%. I hate the number 3, so I'd rather have a 7. They're lying. Because it costs them a lot of money. 3% is a bang up rate. Something lower, yeah, probably not.
Probably not.
Yeah.
Patriot Angel, DSCR loan in Tennessee?
Yeah, we can do them. We can do them. DSCR, by the way, we lose most people on this. 20% down on DSCR. I know the thing says 15%, and we do an occasional 15%, but you got to have over a 800 FICO. We lose most people there. You got to have a really good property. We lose the rest of them there. And then once in a while, we get one who qualifies.
Andy the Goat, do you guys do VA loans in Colorado?
Boom, boom. You know it, Andy the Goat. We
You
do VA
already
loans
know.
in all 50 states. All 50. How many? 50. How many? All of them.
And we can do Puerto Rico. I don't know about VA, but we can do Puerto Rico. VA percent over 10%, I think my funding fee is waived.
VA, Andy the Goat, you are correct. Like you're reading the guidelines straight out of the VA handbook.
Straight out of the handbook.
Straight out of Compton. Or wait, out of the
handbook.
Straight out of handbook. Yeah, 10% service connected or more. your VA funding fee is waived. Your loan officer must know, though. I've actually seen people who pulled a COE and the service connection has not made it through the system, and it says non-exempt. They pay the funding fee. Later, they find out they're exempt. They have to fight to try and get it back. Sometimes they win, sometimes they don't.
Ooh, Patriot Angel's back. But I can't qualify for VA because I haven't filed taxes in the past 2 years.
Patriot Angel, you got big problems. Yeah, kind of big problems because, you got to file your taxes. So if you're trying to get a house and you haven't filed your taxes, probably not going to happen. There's a few where I might be able to make it happen, but you're not going to like them. You're going to have 20% down. We're going to have to prove your income, but how do we prove your income if you haven't filed taxes? It's difficult. DSCR, I can probably get away without taxes. Yeah, right? Mm-hmm. DSCR. A few others.
Jay with a trick question. Can I get a VA loan with no job?
Yes.
Yeah, trick question.
Yes. Jay, that was a tricky. I'm doing a VA loan right now. Today, right now. Guys, service connected at 100%. So he gets service connection. Has Social Security disability income. He gets Social Security disability. I get to gross both of them up 25%. Purchase price $600,000 all day long.
All right, Jay, there you go. Don De La Cruz. Oh, that's almost like Dom De La Cruz. Mm-hmm. First time home buyer.
That's badass.
Yeah, first time home buyer want to do FHA loan fixed. Is it a good time to buy? Don asks.
Don.
Hey, thank you for the hearts, guys. Get us to 10,000, please.
Appreciate you. Hey, Don, it's probably the best time, and you have to watch us enough to really understand it. But right now, it's a buyer's market. If you qualify, it's a good time to buy because rates are high. That sucks. But because there's not that many borrowers out there because they don't qualify, the borrowers own the market. What are you selling?
Ben Morgan.
Where you been? Ben Morgan? Dude, where you been?
Ben Morgan.
Ben Morgan. Hey, we're loan officers, licensed loan officers, 944-254.
1066958.
We work for New American Funding. We help people get a house in 2024.
And 25.
And 25.
I plan on being here.
If we're selling anything, we're hawking mortgages.
Yeah, I guess. Answering questions and helping people more.
Yep.
Andy the Goat. Well, I believe inflation is too high to cut rates anytime soon, which could create a bubble.
Andy the Goat. I'd like to agree with you, but I don't.
Round one.
Yeah,
Fight.
I don't. Yeah, round one. Fatality. No, I don't believe you. I don't. I do think that inflation's a bitch, and I think there's a lot of stuff going on that's not pretty. But I also think that this guy probably knows more than you and more than me. And I do have my positions, and they're pretty strong. And these 12 people of the FOMC, they're the smartest finance people on the planet. So they all got together and they said, hey, what do you think's going to happen? And they said, hey, that's going to be the direction of the economy. It's not going to be a straight line. In fact, if you'll see all 12 members, they're across the board all over the place. But they do come to a consensus at 2.5% FOMC prime funding rate in the end of 26, 27.
All right. El Presidente, I get all my financial advice from TikTok.
You know what? That's pretty smart.
A lot of people do.
Yeah, I know.
Nowadays. Alex, where are y'all located at? I'm in South Carolina.
He's right there. I'm right here.
Yeah.
Yep. Riverside, California, but we do business in all 50 states.
X Station 21.
We haven't had that one in a while.
For the 700th time. What is Dakota Prescott doing hockey mortgages during the NFL off season?
They didn't do good last year. Dallas Cowboys.
You ever seen me play a game? There you go. Ben Morgan, do you all work for certain locations or states?
Do you work all states, all areas, all counties, everywhere? I can do an FHA, VA, Fannie Mae, Freddie Mac, USDA. I can do a bank statement loan, DSCR loan. We can do it in all 50 states. I hope that's clear enough. All 50.
Even if you're not connected to the continent. Patriot Angel, credit score 675. I make $15,000 a month and a business owner looking to get a loan for second help. All right, call us.
Okay,
so
Patriot, if you need a badass loan, call Badass Loan Officer. You can reach your badass loan officers, Chris and Lee at New American Funding. You can do it by calling the number on the screen. But don't call it right now because we're live and we will not answer. As soon as we're done live, we will talk with you, give you all the answers, fulfill all your dreams.
And we just answered Patriot Angel's question at the same time.
Yep.
AJ, what are the positives and negatives of a short sale for a VA buyer?
There's a lot. There's no real positives. If you're short selling, that means that you owe the bank 500 grand. You're selling it for 400 grand. So the bank's taking a loss of 100 grand. But if you think they're taking it, you're not understanding the way the system works. The VA is taking it, and it's going to charge it against the veteran. And it's going to be held against the veteran forever until he pays it back.
Yeah. Jay, can I get a VA loan with no job with a co-borrower and we both have no debt?
Well, the co-borrower changes the game a little bit, but only a little bit. Here's why. Because if you got a VA loan and you're the veteran, $400,000. The VA loan says, hey, zero down for you. Yeah, zero down for you, Mr. Veteran. You're like, hey, I'd like to have a co-borrower. All right, cool. Is he a veteran? Nah, not a veteran. All right, we can do it by the guidelines. He must put 25% of his half. So the VA is going to guarantee your half on a $400,000 house. Your half is 200 grand. He must put 25% of his 200 grand, or in English, $50,000 down. Once I tell people that, they're like, well, that defeats the purpose of a VA loan. No, not really. Not for the veteran. The veteran gets in for zero down.
Yeah.
But the VA loan, they're not stupid. They're like, hey, yeah, just bring your buddy on. No worries. Yeah, don't worry about it. No, they don't forbid it either. They just say, hey, your co-borrower must put 25% of his half down. Or $400,000, $200,000, 25% of that, 50 G's.
I am blessed 23. What about Ohio?
Yes. Ohio is in all 50 states, so yes.
Arthur, I want to buy a rental property. I currently own a home. Credit score in 805. What's the down payment?
So, if it is going to be an investment property, 20%. 20%.
There you go.
Let me say it again, 20%.
Roger Salcedo, thank you for the love. Mikey, 2012. Hey, guys. My wife has a 720 credit score with 40K a year. I have a 620 with 90K a year. Any options? Well, at $130,000 a year, you got a lot of options.
Yeah. $500,000 house starting.
Yeah.
$500,000 starting.
Alex, does fuel additive actually clean your engine? The salesman says it does.
Yeah, it says it does. Hey,
buy 2 bottles.
I think it's hilarious. It's like, okay, so the oil salesman guy says I should change my oil every 3,000 miles.
Mm-hmm.
Yeah. Yeah. Should you?
Mm-hmm.
Why?
Oh, no, not at all.
Because the oil salesman guy said so?
And this is the first group of loan officers that says don't refi all the time either.
Yeah, I know. Every loan officer is saying, hey, good time to refi. You can make a case for it too. But if you back up far enough, they're making themselves a lot of money. But the truth is, if you come at me and you say, hey, listen, I know it's only 100 basis points, but I really want to refi, I'll do it. I'll make $5 grand. I'm not going to push you away. But I'm also going to tell you, you should wait till we hit the... No, Lee, I want to do it right now. I can skip 2 months payments. Yeah, you can skip 2 months payments. My payment will go down. Yeah, your payment will go down. I want to do it, Lee. All right? I'm going to give you my advice, and then you're the boss, and I'll put 5G in my pocket.
Who's the boss?
Every single time.
Trisha, Matthew, Ben, thank you for the love. Alex, bro, just yapping at this.
Bro, just yapping. Alex, I dig you, Alex, man.
You should get an office next to him.
You should get, just one. That's me talking.
Austin, 683 Experian, FICO 860K annual, and only debt is a car at 580 a month. What's the buying power? So your 683 isn't accurate, but you're probably still a qualify.
I'd say you're about 250.
250.
Yeah, somewhere around there, 250.
250 cent. Laura, that comment was uncalled for.
I don't know what we're talking about, Laura. If you're talking about them shooting us, I appreciate you, Laura. Thank you for coming to my defense. You know what? In the Roman days, there was that big badass gladiator with the freaking, he could just, the lion comes out, the new gladiator comes out, he could take anybody, but always there was some damsel going, don't you dare hurt him.
Yeah.
I appreciate you, Laura, man. I dig you, Laura. I dig you. And that's when the gladiator goes, Laura, I'll see you after I wipe this floor with this guy.
Rapid fire time.
All right, cool.
Tiff. Is there any lenders that will allow voluntary child support under 6 months to be used as income?
No. It's easy to get it. Not voluntary, though. If you both agree, you just say, hey, we both agree. Sign a document. Take it to the judge. The judge says, hey, you both agree? Yup. Boom. It's no longer voluntary. It's not mandatory.
Elite Gods, do you use credit card debt if it's an authorized user?
Yes. I was going to say it depends if it's, yeah.
DeBrew78, how long do I have to wait to do a HELOC after Chapter 13 discharge?
You can do it while you're in discharge. If you reaffirm the loan and you made 12 monthly payments on time and you have 80% LTV and you have above 620 FICO, 680 FICO, and everything else lines up, you can do it while you're in bankruptcy.
Patriot Angel, I'm fine with 20% down. DSCR or bank statement loan has to be my route.
Patriot Angel, we're here for you. We'll make it happen.
And to the GOAT, that guy just wants to keep his job. Doesn't matter how much he knows.
That's
I
right.
Guess time will tell.
Yeah, we're going to tell. Andy the GOAT, we've been hearing it for a long time. I think, you know what? If the market crashes, I'll probably be way better off. But I can't plan on it. Yeah, I can't plan on it.
Patriot Angel, thanks guys. Took a screenshot. I'll call after.
Appreciate you, Patriot guys.
Andy the GOAT, wait, okay. So what if my co-borrower is also a vet though? Would she have to use her VA as well?
Oh, Andy the GOAT, that's a very good question. They do have something called splitting VA entitlement. You can split the VA entitlement. You can use one or the other or split them. I've done married veteran couples where we do one house here. 4 years later, they do another house here. Perfectly fits within the VA guidelines.
Mikey, thank you for the love. Jay, can I use my MHA that I get from the GI Bill as income?
No.
All right, you ready, Lee?
Yeah, well, that's real quick because that's temporary. It's not permanent. And the GI Bill eventually goes away. We've been Chris and Lee. We appreciate you. We'll be back.
Happy Monday, y'all.